What happens when two of the world's closest allies engage in a full-blown trade war? In February 2025, President Trump announced sweeping tariffs on Canadian goods, sparking a trade conflict that has reshaped economies, industries, and global markets. From rising prices to environmental dilemmas, the ripple effects of this dispute are far-reaching. In this video, we'll break down the causes, key events, and impacts of the U.S.-Canada trade war, and what it means for the world. It all began on February 1st, 2025, when President Trump announced a 25% tariff on almost all products coming from Canada. Energy products were taxed at a lower rate of 10%, but the move was unprecedented. Using the International Emergency Economic Powers Act, or IEEPA, the U.S. bypassed the usual dispute resolution mechanisms under the United States-Mexico-Canada Agreement, or USMCA. The official reason? National security, illegal immigration, and the flow of fentanyl, a dangerous opioid linked to thousands of deaths annually. But Canada wasn't about to back down. Prime Minister Trudeau swiftly announced countermeasures, imposing a 25% tariff on $30 billion worth of U.S. goods, including bourbon, home appliances, and clothing. After a 21-day consultation period, the list expanded to $155 billion, targeting key sectors like agriculture, dairy and poultry, and industrial goods like steel and machinery. The tension reached a temporary pause on February 3rd, when negotiators agreed to delay the tariffs for 30 days. In exchange, Canada pledged $1.3 billion to enhance border security and combat drug trafficking, including the deployment of 10,000 personnel to monitor its northern border. But this pause was just the calm before the storm. The economic fallout was immediate and severe. In Canada, analysts predicted a 2.5% drop in GDP growth for 2025, with supply chain disruptions hitting industries like auto manufacturing hard. Inflation was expected to rise by 1.5% to 3% annually, squeezing businesses and consumers alike. In the U.S., the impact was equally stark. Farmers in Illinois, a major soybean-producing state, faced the risk of losing a $20 billion export market to China. Rising fertilizer costs only added to their struggles. The construction industry was hit by shortages of lumber and gypsum, with projects like the expansion of Chicago's O'Hare Airport facing delays. Consumers felt the pinch, too, as prices for everyday items like appliances and electronics jumped by 10% to 25%. Panic buying ensued, with people stocking up on essentials before prices climbed even higher. And the effects weren't confined to North America. China added fuel to the fire by imposing a 10% tariff on U.S. coal and liquefied natural gas. Meanwhile, the price of Bitcoin swung wildly, dropping as low as $92,500 before climbing to $100,800, a sign of just how nervous global markets had become. Amid the economic chaos, Canada made a strategic shift in its oil trade. The Trans Mountain Expansion, or TMX project, tripled pipeline capacity to 890,000 barrels per day, allowing Canada to send 20% of its oil to Asian markets like China, Japan, and South Korea by 2025. This marked a dramatic change from the past, when nearly 98% of Canadian oil was sold to the U.S. But this shift came with its own challenges. Environmental critics pointed to the oil sands in Alberta, which produce 64% of Canada's oil, as a major obstacle to meeting the country's climate goals. Despite a carbon tax aimed at reducing greenhouse gas emissions, the TMX project seemed to pull Canada in the opposite direction. Politically, tensions escalated as President Trump claimed a $55 billion trade deficit with Canada, largely driven by oil imports. But experts argued the deficit was more nuanced, with the U.S. receiving 77% of Canadian exports, including 60% of its oil. Meanwhile, Disputes over fentanyl further complicated matters, with 90% of U.S. seizures occurring at the southern border, not Canada. Behind the numbers and policies are real people facing real challenges. In Alberta, oil sands workers shared how Canada's shift to Asian markets was reshaping their livelihoods. For soybean farmers in Illinois, the new tariffs and rising costs threatened their way of life. And for everyday consumers, the trade war meant higher prices and uncertainty. One shopper we spoke to said, "I used to buy appliances without thinking twice. Now I'm stocking up before prices go even higher." These stories remind us that trade wars aren't just about politics. They're about people. The U.S.-Canada trade war is a stark reminder of how interconnected our world has become. Tariffs in one region can disrupt global supply chains, affect markets, and even influence digital currencies like Bitcoin. China's 15% tariffs on U.S. coal and technology, minerals like tungsten and tellurium, added another layer of complexity, targeting key industries like semiconductors and solar panels. But perhaps the most significant lesson is the danger of bypassing trade agreements like USMCA. By using national security exemptions to impose tariffs, the U.S. set a risky precedent that could lead to more conflicts in the future. Cooperation, not confrontation, is key to addressing shared challenges like drug trafficking and climate change. The U.S.-Canada trade war has reshaped economies, industries, and lives. From rising prices to environmental dilemmas, its effects are far-reaching. But as we look ahead, one thing is clear. In a globalized world, no nation stands alone. What happens between the U.S. and Canada affects us all. Stay informed, stay engaged, and let's work together to build a more cooperative future. Thanks for watching, and don't forget to like, share, and subscribe for more insights on global issues.